Have you been watching silver over the last few months and wondering, why did silver shoot up, only to come crashing back down? Or maybe you're brand new to stacking and you're asking yourself, is now a good time to buy silver? Well, today we're going to break down exactly what's been happening in the silver market over the past 3 months, why prices have been bouncing around so much, and what it could mean for both new buyers and long-time stackers. Whether you own 1 ounce or 1,000 ounces, there's something here for everyone. So let's jump into it. Let's start with the obvious question. What actually happened? Just a few months ago, silver was trading around the mid to upper $70 per ounce range, and by the middle of May, it briefly pushed into the high 80s. People were getting excited. YouTube was full of silver to $100 videos. Coin shops were packed. Online dealers were seeing strong demand. Then, everything changed. Over the next several weeks, silver sold off hard, eventually falling into roughly the upper $50 per ounce range. That's a decline of around 30 to 35% from the highs. So, what happened? Well, there wasn't just one reason. There were several. The second major reason is the US dollar. Silver is priced globally in US dollars. When the dollar gets stronger, silver effectively becomes more expensive for buyers in Europe, Asia, South America, everywhere. As demand slows internationally, prices tend to fall. This relationship between the dollar and precious metals has existed for decades. It's one of the first indicators experienced stackers watch every week. Here's something newer investors don't always think about. Imagine you've been buying silver for months. Your investment jumps 40%. Would you sell some? Many institutional investors answer, absolutely. After silver reached those May highs, hedge funds and professional traders began locking in profits. That selling triggered more selling. Algorithms joined in. Momentum traders exited. Before long, the correction snowballed. This is completely normal in commodity markets. Markets don't move in straight lines. Now here's something that makes silver unique. Gold is mostly a monetary metal. Silver is both money and an industrial metal. It's used in solar panels, electric vehicles, electronics, medical equipment, and semiconductors, even batteries. Nearly half of global silver demand comes from the industrial industry. So when investors think manufacturing could slow, silver often falls, even if gold remains relatively strong. That's exactly what we've seen recently. Now let's leave the United States for a minute because silver is a global market. China is the world's largest industrial consumer of silver. When Chinese factories slow down, silver demand drops, and prices often follow. India is another huge player. Unlike China, India buys enormous amounts of physical silver, not just for investing, but also for weddings, festivals, jewelry, and generational wealth. Then you have countries like Mexico and Peru, which produce a significant amount of the world's silver. If mining slows there, supply tightens. If production increases, supply grows. Everything is connected. When people say, silver is $57, they're usually talking about the COMEX or Kitco spot price. But that isn't what you'll actually pay. If you walk into your local coin shop today, American Silver Eagles will likely cost significantly more than spot. Generic rounds usually have smaller premiums. Large bars often carry the lowest premium per ounce. That's why experienced stackers always say, don't just watch spot price, watch premiums too. Sometimes spot falls, but physical silver barely gets any cheaper. So where do we go from here? Nobody knows for certain, but there are several things worth watching. If the Federal Reserve begins cutting interest rates, silver could benefit. If the US dollar weakens, silver could benefit. If manufacturing improves around the world, silver demand could increase. On the other hand, if rates stay high, the dollar continues strengthening, or global manufacturing slows, silver could remain under pressure for a while longer. The people who tend to do the best aren't the ones trying to perfectly time every top and every bottom. They're the ones who consistently buy over time. Understand why prices move, and stay patient. Silver has always been volatile. That's part of the journey. If you're stacking for the long term, short-term price swings can become opportunities rather than reasons to panic. Now I want to hear from you. Are you buying silver at today's prices, waiting for it to fall further? Or do you think we've already seen the bottom? Let me know down in the comments. Thanks so much for watching. And as always, happy stacking.